Three, two.
Kia ora everyone, welcome to Politics in Full Sentences. Your thoughtful take on the week's political happenings with a strong lashing of free markets and free minds. I'm your host, Ron Premathilika, and joining with me today is the former governor of the Reserve Bank, the leader of the opposition, and former leader of the ACT Party, Mr. Don Brash. Welcome
evening.
to the show.
Thank you.
As well as the man that needs no introduction, a champion for freedom and choice, who also happened to be running a little bit late today in traffic, Mr. David Seymour. Welcome.
Well,
Thanks for making it.
You know, when Air New Zealand say being there is everything now, I know what they mean.
Well done, well done. I hope you didn't get too many speeding tickets. You couldn't.
Of course, we always follow the law.
Now, there has been a lot of interesting topics this week, but none more relevant than the Reserve Bank cutting the official cash rate by 50 points to 1%. Now, being a layman and no financial market whiz, I would like to ask you, Don, if I may, what is the role of the Reserve Bank?
Well, the role of the Reserve Bank used to be simply to keep inflation under control. The 1989 Act says that the Reserve Bank must use monetary policy to maintain and achieve and maintain stability in the general level of prices. That was the primary focus of the Reserve Bank. Now, the current government has modified that somewhat, and the Reserve Bank is now supposed to use monetary policy to both keep inflation under control and maximize what they call sustainable employment. Now, some economists say you cannot achieve two different things with a single policy instrument, but this government thinks we can, or thinks they can.
David, what are your thoughts?
Oh, look, I don't have anything like the expertise that Don has, but it seems to me that, you know, the interest rate controls the supply and the price of money to people in the economy, and that's all it does. It just changes the price of things.
Yeah.
The idea that it can change the real economy and change how much activity there is and whether or not people are employed seems to me to be nuts.
Yeah.
And I think I'm on stable ground saying that's what the long-term evidence is. But what's changed under this government is, first of all, Parliament changed the law and ACT opposed that. And now when they make a decision, they're not only thinking about inflation, but thinking about the employment effects. And it's really weird. All of the commentary, and when the Reserve Bank governor came to Parliament this morning, was not about making sure that prices are stable. It was all about how the Reserve Bank is somehow going to have an influence on the economy. And I mean, I defer to Don on these things, obviously, but it seems to me, I would have thought that was a change since the environment that Don operated under. And it's not a criticism of Adrian or the bank or the governor, but perhaps the framework they operate under.
Yeah, I think it's fair to acknowledge that in the short term, monetary policy does have an effect on employment and activity. In the long term, the evidence is that it doesn't. And I think that trying to achieve those two objectives with a single policy instrument is a mistake. But having said that, as you say, the governor did cut the short-term interest rate yesterday by 0.5%, 50 basis points.
More than everybody expected.
More than everyone expected. In fact, most people expected 25.
Yeah.
He cut it by 50. That was a surprise to the market, and I suspect a surprise to the Reserve Bank staff. Why do I say that? Because monetary policy statement issued at the same time had a projection for interest rates over the next 6 to 9 months, all inconsistent with an official cash rate of 1. So it was a very last-minute decision, I suspect, that the document itself doesn't reflect a 1% official cash rate.
That's really interesting.
And given the fact it was therefore almost certainly a last-minute decision, what is surprising is that, of course, also in the last few days, just prior to the announcement, the unemployment number came out, the lowest it had been for more than a decade. So one would have thought that would have made them less prone to cut, whereas in fact they were more prone to cut.
I mean, what does this mean for mortgagees?
Well, I think certainly mortgage rates are expected to decline. In fact, already most of the big banks have cut their mortgage rates, and that was certainly predictable when the official cash rate was cut. Now, from the point of view of a borrower, that's very good news. But one of the major banks has already said that one of the consequences of that is that house inflation will resume. It's been a bit stagnant the last little while. Some prices have been falling in some parts of the country. But one of the banks says that they expect house prices to rise by about 7% next year.
So that's actually fueling inflation.
Well,
potentially,
house prices are not actually counted in the inflation number. The CPI, the Consumer Price Index, doesn't include house prices.
Okay.
But if you're worried about the ratio of incomes to house prices or house prices to income, which are already very high by international standards, this is going to make it worse because clearly, if that bank is right, house prices do go up by 7%. Incomes aren't rising anything like that fast.
Yeah, no, I mean you clearly seen the currency nosedive and making imports more expensive. So I would assume that would translate onto the shelves as well, possibly
and
making things more expensive.
Of the objective, I think.
Okay.
When you look at the inflation number in the 12 months to June, it was 1.7%, a little below the 2% target which the bank has.
Okay.
The target is to keep between 1 and 3.
Okay.
2% is the midpoint. They've been under the midpoint for quite a while. But if you disaggregate that number, goods and services produced within this economy actually inflated over the last 12 months by 2.8%. Goods imported went up by only 0.1.
Okay.
So it's that imported goods, low inflation for that, virtually no inflation, in fact, which is dragging the aggregate number down to 1.7.
That's really interesting. Now, I think this is going on to the next question I had lined up. Your Reserve Bank has been cutting interest, so why are we seeing no inflation in response? So,
this is a phenomenon we're seeing almost all over the developed world.
Yeah.
Very low price pressures. I think no one fully understands why that is the case. It's certainly not, in New Zealand's case, a high level of productivity, output per person, but there has been very low inflation in New Zealand, but also in Europe, UK. All the main developed countries have seen very low inflation in the last 5-10 years. In fact, since the global financial crisis.
I mean,
this is sorry, can I cut it? This is something this is one of the reasons I was so keen to get Don along, and thank you, Don, for doing this. It's great to see you always, but especially in such crazy times for monetary policy to be able to quiz you. And one of the things I'm interested in is, the old story is you put the interest rates down, mortgage rates go down, lots of people got lots of cash, they go out, they spend it, the prices go up, and you get inflation, and then, back when you were doing it, you sort of adjust it again, and amazingly the prices stayed stable, and the economists said you were the best central banker in the world for doing it at one point. It was all great. But it seems like, not just in New Zealand, but all around the world, all those old rules have gone out the window. Interest rates are so low, and some countries are negative, and we really need to get onto that, because that is something that Europeans have been dealing with, and New Zealanders may have to wrap their head around soon. And yet the inflation's not there. So I just wonder, is it because there is inflation, but it's in things that we don't normally count as inflation, such as houses and shares, because there's a lot of things that have gone up hugely in the last decade, or is there some other mysterious factor at play? I mean, how can you have low interest rates and no inflation? This is too strange.
Yeah. Well, I don't think I can answer that in a few minutes, but you're quite right. One of the consequences of very low interest rates is that asset prices, which are not part of the Consumer Price Index, but share prices, house prices, property prices, and so on, have gone up very sharply. And we've seen an almost continual rise in share prices, for example, since the global financial crisis a decade ago. And similarly, house prices and things which, as you say, are not counted in the Consumer Price Index. And that has to be a worry for monetary authorities, because it's all very well to keep consumer price inflation low, but if that feeds straight into asset prices, share prices, and speculative bubbles, that's not very helpful.
Yeah. The negative interest rates, I mean, how does that work? What are the,
Well, in principle, I mean, as you know, we're at 1% as of yesterday, official cash rate. One could go down, say, to half, to quarter, 1%. And some central banks, the Swiss National Bank, for example, the European Central Bank, have some interest rates below zero, which doesn't mean for ordinary individuals putting money in the bank, they get have to sort of pay for the bank.
That's right.
But if you're a commercial user,
Yeah.
you are effectively having to pay to have your money looked after.
Yeah.
Now, the general assumption is that central banks can't drive interest rates below about minus 0.75%. I don't know where that number comes from, but it's about that. If you push them below that, people draw cash, physical cash, and hang on to it.
Yeah.
Because it's cheaper for them to
keep
pay the
it
security
than
costs.
So people will literally be putting it under their mattress.
Yeah, that's right. Yeah, or equivalent.
Oh, yeah.
In a safe.
It's amazing.
And one of the theories is that at some point, if you want to drive interest rates still lower, central banks may have to auction cash. So you may have to pay $1.03 or $1.04 for $1.
Wow. Okay.
Which is equivalent to a negative.
That's really interesting. That is really interesting.
To discourage people hoarding cash.
In the past, I guess, have there been examples of this before where we're kind of going really low and negative interest rates? And I guess the more important question is, being, I guess, for a normal, ordinary Kiwi that's just gone, great, I can borrow so much more in money. We're going to get, borrow $1 million for a 2-bedroom apartment in central Auckland, which is probably not far off the current market values. What happens when it starts going back up the other way? Because that surely, if it moves up a couple more points, or
well, that's right. I mean, it's one thing to borrow money when it's very cheap, as it is right now, but if and when interest rates go back to more what we think of as more normal levels, 6, 7, 8, 9, then there could be severe cash flow pressures on the borrower.
I have another question that's related. I asked Adrian Orr this question this morning. I asked, well, for most of my life and for most of the sort of current generation of middle-aged to older New Zealanders, the rule has been, live within your means, put a bit aside, save, invest, and you'll be rewarded for that, and you can retire quite nicely if you do that. And what we're seeing, at least for bank interest rates, people that I represent in the Epsom electorate are saying, look, term deposits are a waste of time right now. I can't be bothered. And I put this to Adrian. I said, has something fundamentally changed in the culture that it's actually not worth saving and investing anymore?
Yeah.
And he said, no, you've got to just work hard. You've got to go and find investment opportunities that are there, but you can't put it in the bank anymore. And I thought, okay, that sounds fine, but I wonder if you might have an idea of what he really meant by that, and in terms of, well, why, if surely banks are still one of the major sources of capital for a lot of businesses. So if they can't find places to put the money and get a return, what hope does the average punter have?
Well, but it still makes sense for the average punter to save,
right?
Even if they get no interest at all. Almost by definition, inflation is very low, so money is retaining its value. And if we want to have some money to look after ourselves in retirement, we need some cash, even if we haven't earned much on it over the time.
In terms of getting a return, would it be better to put it into an asset?
Well, I'm going to get in trouble with the law if I
That's right.
But I mean, that's what people have been doing, of course. They've been buying shares, buying property, and that's why we see a bubble in both of those asset classes.
That's right. You use that word.
Bubble? I know. Well, some people deny there's a bubble.
That's
but
right.
I certainly, if you take house prices as being affordable, when the median house price is about 3 times median household income, we're now 9 times in Auckland,
That's right.
and a similar level in Tauranga.
Wow.
Now, for most ordinary people, that's a ridiculous level of house prices.
Oh, look, it's really hard to get your head around it. Even the cost of building, I read somewhere that the cost of building a house has gone up 200%. The cost of the land has gone up 900%.
That's correct. It's a land price primarily, as David regularly talks about.
Yeah.
It's a problem with the Resource Management Act.
Yeah. I mean,
well, I've got to give credit to Don for this, because Don really, I think, was the first person in New Zealand who started beating this drum, with the possible exception of the late, great Owen McShane. But Don, I think, was the first person with major public profile who started beating this drum and saying, look, land is too hard to develop, there's not enough infrastructure, sections are becoming too expensive, and this is a major economic distortion. And Don, I think in the 10 years since you started giving some speeches saying that, we've got to the stage where everyone basically agrees.
Yeah.
No one's doing anything about it.
I think that's very widespread consensus. You're quite right. I mean, Bill English said that quite strongly. Phil Twyford, to his credit, has said that quite strongly. He hasn't done anything about it.
Yeah.
But he acknowledges the issue, which is. But you mentioned Owen McShane. I mean, Owen McShane was persuaded the Reserve Bank when I was governor to do a detailed study on that. That's how I got convinced.
Yeah.
What would you change, Don, in the current government, if you're in a position of power, to change the laws or the regulations to ease the problem?
How long have I got? Well, I mean, David's mentioned the RMA, and he's absolutely right. It's a major reform need in the country, no question about that. The government has just set up a review panel to look at the RMA, but the deadline is next May, so nothing will happen at the start of the election.
Yeah.
I mean, it's an appalling situation in many ways, but that's a very high priority.
Yeah.
If you're paying $700,000, $800,000, $900,000 for a tiny 400 square metre section in Flatbush, as you do, even putting a tent on that cannot make it affordable.
Yeah. Yeah, it's it is really difficult. I don't know, the consensus that it's always hard to get into housing, so it's always going to be that way. But
not true. Absolutely not true. The other thing, of course, apart from zoning, is the way that infrastructure is funded. Funding infrastructure by development contributions on the front end of section prices means that your house buyer is effectively paying for the infrastructure which will last 40 years in the price of his house, effectively.
Yeah.
That should be funded quite differently, and it can be.
Can I switch gears a little bit? One of my favourite fascinations in sort of world economic policy at the moment and politics is that, as far as I can tell, and you have a more nuanced view, but Donald Trump is going to keep priming the pumps, running deficits, jawboning the Fed, doing anything he can just to keep the party going until October 2020. Yep. And the great irony is that another person in the world who really needs him to succeed is Jacinda Ardern. Because if the global economy blows up in the next sort of 14 to 15 months, I think it's going to...
She's history.
Yeah, I think it's going to be very, very difficult for Jacinda Ardern to get re-elected. But also Donald Trump's in the same boat, so they are bound together. And to be fair, I think Donald Trump has a lot more ability to affect the world economy than Jacinda Ardern, although I guess a lot of people probably aren't so sure in their own minds about that. She's
on the front cover of the Vogue magazine, David. She's an influential person.
Yeah, look, I admire Jacinda for a lot of her personal attributes and some of the things she's done, but I don't think that she's an economist by any stretch. And I just wonder, Donna, your appraisal of where the US is up to, and can Donald Trump keep this thing going for another 15 months? Because it seems desperate to be and bound to blow up. But I
think that's right. I think the current recovery in the US is the longest either on record or for a very long time. So it's getting long in the tooth. It's being buoyed by some what I would call grossly irresponsible fiscal policy, running a huge deficit at the time the economy is going gangbusters. It seems absolutely bizarre. Normally you'd be running surpluses at this point. He's running a huge deficit. And the Republicans, who normally are very hostile to federal government deficits, seem totally relaxed about it. It's just bizarre. But it leaves the US in a very vulnerable state if and when, as one would expect to happen at some point, the economy turns down because interest rates are already low, fiscal deficit already high. Where do you go?
Yeah, and this is another one of these big sort of, I guess, questions I have that I find this is why we needed to get you in to answer these questions about the fact that we came out of the GFC, but in New Zealand in particular, and the world generally, we went in with these tremendous shock absorbers. The New Zealand government was down to about 5% of GDP debt, which is incredible. The CPI was about 8 or 9. Mortgage rates were 11.
Not the CPI, the OCR.
Sorry, OCR.
Yeah. Cash rate.
You're right. But OCR was at 8, I think, and mortgage rates at 11. So there was massive headroom to absorb stuff.
To cut the rates.
Whereas
Right.
if it happens again, I mean, New Zealand's
We've got
still
nowhere to go.
Yeah, the New Zealand government's still got a pretty good balance sheet, but monetary policy's got nothing left, so I don't know what happens.
That's right. Well, I think monetary policy, to my mind, is still the preferred instrument for moderating activity in the economy because it can be turned on and off very quickly. Fiscal policy, almost by definition, can't. I mean, it may be desirable to spend more money on infrastructure and getting stuck in traffic. You'll probably agree with that. but you can't switch that on and off quickly.
No.
Yeah.
That's a multi-year project.
That's right.
Unless you're in China.
Yeah, that's right. In Auckland, it's
Actually,
multi-decade.
just before you walked in there, we were talking about the astronomical progress that they make in China. How many miles per?
Well, I'm talking about a Jeremy Clarkson 90-second video, which pointed out they've built 84,000 miles of high-speed motorway in China in the last 25 years. They're now building at 6,000 miles a year.
Far out.
Which-
I mean, that's faster than cars move on the Auckland motorway. So, you know,
6,000 miles in here. It's astonishing.
So, fiscal policy, you could build infrastructure, but that's not quick to turn on and off. You could make more generous benefits, but you can't turn that off quickly either.
No.
So monetary policy is the best instrument for moderating activity.
Yeah.
And as you point out, as we entered the GFC, we had lots of scope to reduce interest rates. We do not now.
Yep.
Thank you, Don. That's I guess you've answered some of the questions. What can the New Zealand government do in terms of, I guess, fiscal policy to make things easier for New Zealand in terms of not getting us into a hole? Like you mentioned earlier that you've got a bit more room to move, which we don't, given the low OCR rates.
Well, as I say, I wouldn't use fiscal policy as a way of moderating activity.
Yeah.
But to the extent you want to use fiscal policy to increase our long-term growth rate, you do it by changing the tax system to encourage investment, encourage work, encourage innovation, etc.
People should Google the 2025 task force. Don gave quite a good answer to this question, actually, in 2 volumes.
That's right. Yeah. Most people have forgotten all about it.
Yeah.
And certainly John Key, who set it up, has long forgotten it.
He forgot about it very, very quickly. So.
Thank you, Don. Thank you so much for joining us today. And David, before we go, any last words on any of the other happenings in the week, or any last thoughts, David?
Look,
Final thoughts.
It's just a crazy time. I mean, you've got a sex scandal in the Labour Party. The Chinese are trying to control thought on university campuses in New Zealand. We've just had a vote to legalise abortion. You've got a protest at Ihu Matau that looks like the consensus within Maoridom on the treaty settlement process may be overturned. The OCR's down to 1%, and we don't know what's going on with monetary policy. I think people should just vote X to be safe in these uncertain times. And the other thing I'd just say is we should thank Podcasts NZ, but we should also thank Don, because Don actually came in with very late notice and has given us the benefit of his experience as someone who has been named one of the greatest Reserve Bank governors in the world. So we're really lucky to be able to have you, and it's been a real treat for our listeners. So thank you.
Thank you very much.
Thank you.
Thank you,
My
Don.
pleasure.
Thank you. Thank you, everyone, for tuning in. We'll see you again next week on Politics in Full Sentences. Good night.